Hey everyone, we have Vail Resorts, MTN. Last video I made of this company was back in January 3rd, 2025. So earlier this year, it was going for a $6.7 billion valuation, $178. We're halfway through the year. It is currently lower today, down 6% year to date. This company is now selling at pretty much the same price it was selling at in 2020 during COVID. And if you think about it today, they have more assets, they have more cash, they're a bigger company, but the valuation has stayed the same. Check out this first video just to see what I was saying back then earlier this year. This is going to be an update video for Vail Resorts. Currently going for a $6 billion valuation, 5.4% dividend. I still think this stock is pretty undervalued when you look at the balance sheet and when you compare the assets year over year. They own a lot of rare properties and rare real estate in prime ski resorts. And if they could just fix a couple things, there should be a comeback with this stock. So with Vail Resorts, if you're thinking investing in this company, it's more suitable for the investor that's looking for a steady dividend, wants to hold a company that's a little bit on the safer side, that's backed by assets, real estate. So a couple of notes from the previous season, just some notes that they listed from quarter 1 2025, just a little review. Record low snowfall and lower demand in 2024. So they have this new resource efficiency transformation plan. It's supposed to deliver 100 million in annualized savings. Basically, it's just to clean up the business, and they've been working on that. There's already been some huge improvements in their fundamentals for the 2024 year, which we'll go over. But just some other things real quick. Institutional ownership, it's pretty much been flat since 2020. And also we have a little bit of insider buying. CFO Angela Korch, currently purchasing stocks. It's always a good sign when the CFO is buying. They're in charge of all the financials. If they're buying, that's a good sign. She's purchased the stock 3 times so far in 2025. And the latest upgrade they got was from JP Morgan to neutral. Looks like it's starting to bottom out. This could be the bottom around here back in April. And why do I think this stock is undervalued? Well, because they own so many assets. They own too many assets to be valued only at $6 billion. They have also been paying a steady dividend. Let's look at the dividend history. Looks like they paused the dividend in 2021. But they're back on it. Insiders own 3%, 8% short float, 36 million shares. So it's a low amount of float. That's why the stock sort of fluctuates heavily. Yeah, let's go over the fundamentals real quick just to see an update on what's happening. Quarterly, we'll start with quarterly. So April 2025 is the latest column right here. 4 consecutive quarters of minimal revenue growth. It's not really growing. Latest quarter they posted 1.295 billion versus 1.283. So no growth. And if you take a look at the previous quarter, it's only 5% up year over year. So nothing too crazy. Earnings per share, we've seen an uptick in earnings per share past 2 quarters. This could be being helped out because of the share buybacks they're doing. Okay, so profit margins are good. 58% profit margins on the latest quarter. They have weak profit margins during the summer, as you could see right here, because who's skiing in the summer? But when you go to the winter seasons, January, first quarter, and also fourth quarter, they always have high profit margins. Again, the cash flows are in line with the profit margins and also the total revenue. They are pretty flat. Latest cash flow for the first quarter, $2.27 versus $2.25. We're already starting to see some improvements, but no crazy growth or anything. They're kind of just like, they're kind of just in limbo. Go down to net income, improvements in the past 2 quarters, 392 million versus 362, up 8%. And up 11.9% in the first quarter. So everything else is kind of flat. All right, so let's take a look at some of the annual stuff. So share count's been going down from 2020 to today. Share count's down 3 million. So you see a huge sales growth in 2020, up 30%. Highest gross margins, highest net income, highest earnings per share. And it's been coming down ever since. We've had a little recovery coming in 2024. Return on equity, return on assets, they're all staying consistent. Margin of profit is consistent. Return on capital is consistent. Cash, we have about 467 million in cash, 1.7 billion in debt. And the free cash flow per share is pretty consistent. On the yearly, this company's fine. And when you look at the micro, we're starting to see for the past 2 quarters some improvements. All right, so let's look at some other stuff. Going on to financials, we go to balance sheet. So they don't have too much cash, right? 460 million in cash. But when we go to their long-term assets, what is all under their long-term assets? Property, plant, and equipment. They have over 5.5 billion in property, plant, and equipment. So a lot of this right here is the real estate that they own, the condominiums, the properties, the ski lodges that they own, and the restaurants that Vail Resorts own. They own over 5.5 billion. They own golf courses and clubhouses and land for development that Vail Resorts owns. Vail Resorts owns pretty much prime real estate for all these ski resorts. Here's a big one, Rock Resorts. So it's a collection of luxurious mountain getaways. Locations include Vail, Beaver Creek, Park City. So Utah, you have Colorado resorts. So they're trying to combine everything all in one. You could rent all your gear, you could book your room, pretty much a seamless experience on and off the mountain. Look at all these properties. The lodge at Vail. So yeah, some of the most beautiful resorts out there are owned by Vail Resorts. Yeah, look how happy these guys are. So yeah, just a quick update, but I like this company. Look at that, right by the mountain, right by the slope, ski in, ski out. Again, just to sum it up, pretty much selling at the same price it was selling at back in 2017, 2020. Another chance for you to get in this company. This isn't a growth company. I would recommend this stock to someone who wants a dividend. They do pay a steady dividend. I would categorize it as a value investment because of the assets they own. And if they ever get into trouble, they do have the option to liquidate some of those real estate and assets. Just some final numbers. Total liquidity, they have 1.6 billion. So cash, 467 million in cash, 508 million in a US revolver, 450 million in a long-term loan, and a 250 million of revolver availability under the Whistler credit agreement. Currently, the CFO is repurchasing shares. The company itself repurchased 200,000 shares at the average price of 161. So the CFO, the company, they're all buying shares. And lastly, the board of directors has increased the share repurchase program from 1.5 million to 2.8 million shares, pretty much doubling the share repurchase program. They have enough liquidity to do this. They have enough cash flow. This company is going to be fine. Check it out. Let me know what you guys think in the comments below. I think it's a steal at these prices. It looks like it could be bottoming out. Just a quick update. Check out my other videos. Thanks for watching, guys. Don't forget to like, subscribe, and we'll see you again on the next one.